But what I first want to get into is Deutsche Bank, the next Lehman Brothers. So if you've been following the stock price of Deutsche Bank and what's been going on with them, is essentially their stock is hitting all-time lows. There's a lot of similarities between what happened in the 2008 financial crisis with the Lehman Brothers going down and taking down the entire stock market and economy with it. Deutsche Bank is a much bigger bank. Like Lehman Brothers was just a small tiny bank, and that was enough to take down the entire stock market. Deutsche Bank owns a bunch of banks, so it's like a bunch of Lehman Brothers going out of business if that fails. And just today there was an article that came out where they spun off $50 billion in bad assets into another company, basically another bank, which holds all these $50 billion in bad assets, which the European taxpayer is now paying for. Like, it's already starting to fall apart, and there's all this propaganda going on where they're like, oh no, like it's totally fine, like don't worry about it, you know, buy Deutsche Bank stock, you know, ignore what's going on. It's just fascinating. It's like literally like history is repeating itself. There's so many similarities between Deutsche Bank and Lehman Brothers. It's kind of crazy what's going on. With the Fed yesterday announcing that they're not going to lower interest rates, even though a lot of people were speculating they were, there's now a prediction of 100% that they're going to cut in July. And it is a bit delayed, but it almost always leads to a recession happening. It's kind of fascinating. Like, you got Trump saying like the Fed needs to cut, the Fed needs to cut, the Fed needs to cut, but then they're like not listening to Trump, which is kind of interesting. And then he's threatening like, oh, maybe I'll get rid of Powell, but I don't know if he actually can. I guess some people are like, oh, he can, and other people are like, no, he can't. So kind of interesting what's going on there. But I think Trump's going to do everything he can to try to keep the economy going well until the 2020 election. But I don't know if he'll be able to do it, because it's like everything's already starting to fall apart. Like, you got collateralized loan obligations, which are, you know, it's the same thing as CDOs back in 2008. It's just with different assets. Instead of with housing assets, which there's still some with housing assets, they're just with, you know, subprime car loans instead of subprime, you know, home loans. It's just with the different assets. But it's like, it doesn't matter what the asset is, because you could, you know, speculate as much as you want, money, you know, dollar amount wise. It doesn't matter what the asset is. It's just like, what are the rates you give me for, you know, the loan falling apart, or the loan succeeding, and the insurance on that loan. And Bitcoin has been going through the roof, gold's been going through the roof, silver's been going through the roof. Like, all the like anti-stock market assets are like spiking, and everyone's predicting that they're going to cut in July. So it'd be fascinating to see what goes on there. You know, maybe July will start to be like how kind of January and December were, where it was like things kind of were tanking really fast, and then, you know, Trump starts tweeting buy signals on Twitter, and, you know, it gets pumped back up. I don't know if Trump will be able to stave off the economy crashing before the election. And if that happens, like, one of the Democrats, you know, offering a bunch of freebies might actually, you know, it's probably their best chance of winning, honestly. Like, because Trump's been claiming full credit for the economy. So if it goes down, he should get the full blame, right? But of course, he's probably going to blame someone else. He's probably going to blame Powell if the economy goes down, because he's going to say like, oh, the Fed should have cut rates sooner. If they cut them sooner, then we wouldn't be in this mess. Yeah, I saw an interview with the guy that wrote the book Rich Dad, Poor Dad. Actually, I've been seeing a couple of interviews on YouTube that he's done, and he's saying that we've been in a depression basically since 2008, which was like, whoa. Like, that's the first person I've ever heard say that like, he has like a year's worth of silver, gold, and cash to pay his employees basically if there's like a total credit freeze. And he's predicting like, yeah, like we've been in a depression, I guess, since 2008, and it's like we haven't really recovered, and we're about to go into another recession, or like just continue the I don't know. It's kind of fascinating. It's like, yeah, I mean, he might be right, but there has been a bit of a recovery in the stock market, but it's like more of the wealth has gone to the top 1% than distributed to everyone in the country. But it's definitely fascinating just kind of hearing that from someone you know, with that much of a stature. That's where something like Andrew Yang's policy of universal basic income is actually not like a terrible idea. It's like, I don't know, they might have to print money just to keep the whole economy going. I mean, that's what they do to bail out the bankers when the bankers fail, right? Like, that's what they're doing with Deutsche Bank. It's like they're failing, so what do? They spin off the bad assets and the taxpayers pay for it. I mean, it's like they do it for the banks, they do it for the elites. Why not just do it for everybody?